This week on Wealth Track, mapping the world's changing landscape. In an exclusive interview, Bank of America Merrill Lynch's global chief investment strategist, Michael Hartnett, explains the themes that are transforming the globe and how to invest in them. Next on Consuelo Mack Wealth Track. Hartnett and his global research team just published the inaugural edition of what they titled their Transforming World Atlas, a series of maps illustrating the firm's favorite cyclical and secular investment themes that they expect will transform the world's economies, markets, and populations between now and 2050.
We created the framework of the transforming world because a lot of our clients just love themes. They love thematic research, and it's a growing part of the business, and it has to be because, if you think back over the past 4 or 5 years, you've had these epic returns from the equity market, the bond market. I think if you go between 2009, 2014, the equity market is up 20% every year.
Right.
High yields is up 18% every year. REITs are up 30% every year. It ain't going to continue forever. I mean, it just can't. And now, at least in the US, the QE stopped and suddenly the returns aren't as ample. You've got to find a way to outperform. And the way that people are thinking about outperforming in coming years is thematically. It could be a tech theme, it could be a demographic theme, but people are looking to concentrate more of their investments in themes, hoping that they will outperform lower returns from the bond market and the equity market going forward from here.
So how important are these themes to your investment process and decisions?
They are terrifically important because a lot of them, right now are good explanations as to why you're living in this quite deflationary world. They help a lot in explaining why interest rates are, so low. So when you look at demographics, you look at technology, there's a lot of good explanation there as to why interest rates may remain at remarkably low levels over the next couple of years. And of course, this is very problematic if you're a pension fund. How do you fund your liabilities going forward from here if you don't think that there are tremendous opportunities in just owning the equity market and the expected returns from fixed income are so low?
Because one of the the headlines of one of the pieces of research that you've sent out to clients recently was that this is the longest deflationary expansion in history. Yeah.
You take every single government bond in the world.
Right.
55% of them are yielding 1% or less. You think of all the QE right now, I think at the beginning of the year, it was supporting 55% of the entire economy of the world. So I think that deflation is writ large across the financial markets. I mean, the numbers are the numbers. I mean, it is the lowest trend rate of inflation right now that you've seen since the 1960s.
How significant is that from an economic point of view, from an investment point of view?
There's explanations for it, and then there's what it means. I mean, the explanations for it, they could be demographic, they could be due to technology, excess debt. The QE, may also have been a factor in that all this QE has allowed...
central bank easing, right.
Yeah, but companies have been able to raise money, add capacity, and you think about Asia, is that capacity needed? I mean, investors are genuinely asking that, you think of my children, I've got an 11-year-old, a 13-year-old, they may never drive. Mm-hmm. They may never have to. It may be automated, cars. Or if they do, they'll share the cars. They don't want to buy products. They want to mess around on their phones. And you end up sort of thinking, what is Asia for? Because Asia is some enormous sort of manufacturing place with all this capacity that may never be sort of utilized. So that's very deflationary, and I think it's a big factor as to why this enormous asset class, fixed income, which is so important to so many things, is trading at incredibly low interest rates and may continue for the foreseeable future.